What's going on, everybody? It's your boy C-Zar with C-Zar. C-Zar gets crypto. C-Zar. I don't know. That's however you do it in sign language. There's a C, that's a Z, and I know that's an R. So, anyways, C-Zar gets crypto. Coming at you live with another crypto video. I've got, an inspiration of the video I made earlier today, which was also, kind of just further detailing something that I've made earlier this month. I wanted to look at the 4-hour, and I wanted to measure any time that we've had a not even price going into the oversold or the overbought in the RSI, but I wanted to measure what happens when price is above the 50 and what happens whenever it crashes below it. I didn't measure any of this stuff because it just kind of wig-wagged all the way through, and I feel like that's like we see that in the price. Like it was just, I don't really want to consider, I think this is just price being bored, so I'm not going to count that so much. I mean, we could. We really wanted to, we could measure from top to bottom there, 4%. Top to bottom here where it corrected, that was another 4%. I mean, it looks like they're probably all little 4% drops, not even 4%, 2.71. I don't know. I didn't feel like, maybe this one is the only one, but I don't know. I didn't feel like adding them because they all really just seem like very small moves, and it just, you can see it in the price. There's not really any direction that's being followed here. It's just a bunch of wig wagging. So I'm not going to count this personally. I want to go back, and maybe we can measure even from the overbought to when it comes out of the overbought. Maybe not. Overbought to below the 50. We can measure that, and then anything that just goes below the 50. So overbought here, crash below the 50 here. The top to the bottom before we went back above the 50 was right here, and we're above the 50 here and then below the 50 again, and we'll just keep kind of doing that. Again, I'm not going to measure this stuff that went above and below because again, it's just that wig wag stuff. I feel like it's obvious, right? I'm not including it because I feel like it shouldn't be included in the data. I'm not including it because I am not including it because I feel like it shouldn't be in the data. I'm not including it because I feel like this only happens when price is being very boring. And right now we're looking for big moves. And the price is kind of boring right now. But I mean, we did just go from overbought. I would kind of expect some kind of move, a bigger move to happen. We've had enough boring price for the time being. So I don't know. I don't know how to describe why I'm not including this stuff in there. But I feel like it's obvious that it's different than the main stuff that we're looking at. So anyways, without any more confusion, from here, it did go below the 50, so we'll count it. That one's kind of a small drop. We're here and then went below the 50. I guess we could count that because it did maintain a little bit above the 50. Just a little bit. And then to the bottom, that's about the same price drop, above the 50 to below the 50 here, right? Just like that. And then from the overbought here, I mean, this one did go, below the 50. Overbought all the way down. And this one did not go below the 50. These ones, I'm not going to count that. I feel like you can see why I'm not counting that, right? You can see why I'm not counting this. It's a nothing. And if we're doing nothing, whatever, it's not important really, in my opinion, to measure a 2% move versus an 11 or a 7 or an 8% move. 2% is not going to determine the direction that we might be looking at. And the reason I'm looking at when it goes below the 50 on the RSI, when I'm looking at it here, when it goes below the 50 and not when it goes above it, is because right now we're already above it and we're coming from overbought conditions. So I'm more concerned with what does it look like when we cross this 50, because it looks like we're getting close. This is on the 4-hour, mind you. What happens when we cross this 50? And I think we've got enough iterations. Let's just kind of go back and see. I don't have a phone. I guess I could just do the Google calculator, and we'll bring it out here, make it smaller. Well, that's not smaller. wonder if I have a different kind of like calculator app that I could use. There's probably something that I just don't know about, but whatever. And then we'll tally all these up and see if we can get an average, you know? So 8, nope, that's 5. 8.89% plus 8.49 plus 7.68, you know, keep on going, plus 11.02 plus 6.14, right? Keep going. We're going to keep going. Let's see. Did I click the plus sign? No, I did not. Plus 5.73. Ooh. Nope. I did that wrong. Dang it. Here, let me see. Real quick here. There you go. So plus 5.73. I clicked the enter button on accident. Plus, we're back here at 5.73. This one here is 5.98. It looks like 5.98 there. 6.09, 7.85. So plus 5.9. No. Sorry. We're not going with intervals. We're going with this here. Plus 5.98 plus 6.09 and plus 7.85. I think that's the last one that I measured. Let me just go back and double check. Yeah, that's the last one that I measured. I think that's enough iterations. So that's 1, 2, 3, 4, 5, 6, 7, 8 iterations since March. Eight iterations since March on this chart, where we've had, besides this little goobity-gawk, little pitter-patter sideways nothingness that I didn't include throughout all that time, because we have really since March, if we go on the daily, we've had a lot of nothingness. It's been a lot of sideways, just nothingness. But when moves do happen, if this is a move that's going to happen, and it's going to be substantial, breaking the 50, we can expect out of 8 iterations, I'm going to do this math now, right, equals that divided by 8, an 8.48% move on average to the downside. So, and I believe that was right. I believe that's, you know, if maybe it was 9 iterations. Let me go back and see. Let's see here. I want to double check. 1, 2, 3, 4, 5, 6, 7. Man, it won't let me go back. That's so great. Let's see. Yeah, whatever. 1, 2, 3, 4, 5, 6, 7, 8, 9. Oh, so it was 9 iterations. I just miscounted. Okay, so it was 9. At which case, let's see. We'll get this guy again, and we'll divide it by 9. Divided by 9. There we go. I thought, whoa, something went wrong here, man. Math is normally my strong suit, I swear. But let's see here. There's that, right? Right. Let's go back and click divided by. Maybe I have to put it in parentheses, maybe. Oh, that's what it was. That's what it was. Okay, so that all equals that, and then divide that by 9 equals 7.54. Okay, that sounds more accurate. I thought 8 sounded a little high. 7.54 sounds more right. So what I'm getting at is, from top to bottom, in the short term, I think it's completely believable that we could drop about 7.5%. That would take us back down to 26,300. And the main point that I'm trying to get to is not that, you know, we're going to dump really fast right now. I do think that a dump is incoming, but more so that we might dump, find a little bounce, a little support here, come back up a little bit, go lower. And what would a price this low do on higher time frames? If we go to the daily, if we're at the daily time frame here, and price were to drop this low, remember that was on a 4-hour scale, so it would happen a little quicker than daily time frames would. You know, in a 4-hour scale, you get 6 bars per 1 bar here, so it's literally 6 times as fast. The daily would go back below the 50 RSI. We'd be back around this purple line again, testing it more or less for the third time. We would definitely be back below the EMA ribbon on a weekly time frame. If we're looking at it, going this low would put us. And if this happens, if we break the 5 hour, this could happen, and it could set us up for basically a lower weekly close and a bearish engulfing candle, bigger than this one, which it might look big. It might have felt big while it happened because it's been such a sideways couple months here, but really it's bearishly engulfing this candle would not be impressive. Just as bullishly engulfing was not impressive, I wouldn't be too impressed by bearishly engulfing. What I would be impressed by would be if we got below these previous highs here, which a 7.5% move wouldn't take us quite near it enough. We would need more along the lines of an 11.24% move, which we did see something like that once, but that's not the common. That is kind of an outlier. But I would be more impressed by something like that. That went down here, even more so that went down to where we had opens and closes right down here. But for now, we're looking at a 7.5 move. That's, in my opinion, that's more to be expected. That makes sense. We're kind of at this bottom of this range, and whenever that falls out, maybe we get a bigger move. Maybe we're in the midst of it now, where we'll get a bigger move. But the reason I'm talking about this, the reason that I wanted to go on the 4 hour and measure all this, is because this is what it would look like if we were to break the 50 on average. We just did it out of the last 9 iterations that have happened since the late part of March. If we did it by 9 iterations and we eliminated all the nothingness, we just took out the moves that actually mattered, which I do think we could get a move that actually matters, especially coming out of overbought territory. From high to low, a 7.5% drop, which that's a little bit over 7.5. I think the actual was let me see, 7.54. So that is a little bit more than the average that we're looking for, but by barely, so I think that's fine. Somewhere around 26,300, somewhere around there, which is kind of this area. It's kind of this area that we found support at before, kind of right here, and over here even. So we could find support there, or we might blast through it and go lower. But the main reason that I wanted to point this out is if this crosses below the 50, then we zoom out to the daily time frame. That's definitely going to send us below the 50 here. If it happens in a day, if it happens in 2 days, it's definitely going to send us below the 50 here, which would not look good. Short-lived experiences above the 50 are not good, and we're going to go over that too. We'll go through and measure all the short-lived existences that we've had over the 50 and the repercussions of the bearish follow-through afterwards. And then the weekly time frame. And by the way, a move down here would also put us below the daily EMA ribbon. And it would just not look good. This would be a rejection, and we would be looking for an expansion. It would be confirming that this is a bearish cross and confirming the very real possibility that we're going to see at least a 40 or 50-something% drop. I forget how far. I think it was a 43% drop the last time we had a daily cross. But if you've been watching my channel, I'm looking for a 52% drop to happen in the next month and a half to 2 months for Bitcoin. And yes, I'm aware that would put us below 15,500. If we're looking at right. If we're looking at the daily, right, that would put this below the 50 again, and then we would also be down by this purple line and back at the low areas of this price range in a very short amount of time, bearishly engulfing this kind of bullish pump that we had, which was nothing. I'm not concerned about that. There was no volume. It happened over the weekend on a Memorial Day pump. Not real to me. This is not real, and I think the real move is going to come in. I would expect when this move happens that we're going to see some volume come back in, something bigger than what we've seen in the past week. Probably stuff that's more like this over here, or maybe even greater. But I would expect to start seeing some heavier volume, especially as we break this purple line. But yeah, so on the 4 hour, remember this all originates from the 4 hour. All the iterations that we measured and averaged, so this comes from that. So that would make the daily look bad. It would make it look like garbage, actually. Again, it would make the weekly look bad because we would be below the weekly closes here. If this happened in like a day or 2 days' time, if it took 12 candles on the 4 hour time frame, which is possible, maybe it takes 6 candles or less. We'd be over halfway through the week and be in a position to bearishly engulf this last bullish week, which just seems to be a trend. Bullish week, bearishly engulfed. Bullish week, it took 2 weeks, but we bearishly engulfed that week, straight on from there. Bullish week, it wouldn't surprise me if we bearishly engulfed it this week. And price dropping below this, down to these prices, would bring us down back around the 50. I don't know if it went that low. I don't know if it would break the 50. Honestly, it might be right around this level, but we'd be very close to breaking the 50. And once this weekly 50 gives, the video I made earlier today, and I'll probably talk about this continuously until it happens. Once this 50 breaks on the RSI, I'm expecting from a top to a low relatively, so this top here to a low, I'm expecting a 52% drop at a minimum. Like quite honestly, and that would put us below. And I'm not saying it's going to happen all at once. You know, I do think it'll happen in a short amount of time. If and when this cross happens, it should happen like approximately 6 to 10 weeks after we cross below the 50. It could happen sooner. It could happen later than that. But that is a month and a half to 2 months, 2.5 months, something like that. But I think it is going to happen in a month and a half to 2 months. Which from now, you know, it's being that it's the end of May, we can just say all of June, so July, August, basically by August, by the you know, ass end of summer, I would expect that we're going to be below this. And I don't think that's going to be the low for the bear market, but I do think that might be a point where we turn around, have another little, maybe a small rally, maybe a rally like this, we pitter-patter for a little bit, and then go down for a final descent toward the end of the year. But I don't know. We're not there yet. You know, it's all kind of a thought. Let's see if this would do anything on the monthly. Not this one. Remember, this is my theoretical drop. Right now, we're just looking at this. I mean, we've got 21 hours left in the month. If in the next 21 hours, which would be, you know, 4, 8, 16, 20, 5 more candles, including the current 4 hour that we're in, right? Because we're basing all this off the 4 hour. If before this month closes, we get down here, that would just be a very bearish look. That would be, you know, most of this candle now is a wick, but if it were to drop down this low, most of it would be a body. Volume comes in, you know, it could pick up more than last month's. This could start to look on a monthly scale like a monthly bull trap. It's kind of crazy. I didn't even think about this, but look at this, man. Like if this is an ABC pattern, which I do believe it to be, the B to the ABC is a bull trap by definition, or a bear trap if it was you know, to the upside. This would be the trap leg, and this looks a lot like what we're experiencing on the daily. Like here, I'll show you, right? So just keep this image right here in your head, basically like this stuff, right? These little green candles, how it bottomed here and how it came up. Keep that in your head, and then close your eyes and just wait and open them, right? Doesn't it kind of look just like this? To me, it looks just like this. Which is it's not the same conditions by any means. You know, this is at the tail end of a downtrend, or maybe in the midst of it, maybe at the beginning of it. But the downtrend's already kind of been in place for a while. We're on a monthly time frame. This is definitely toward the end of a potential little pop we had. Well, I guess it's kind of in the middle of a downtrend though at the same time. I don't know, man. The more I think about it, the more this actually does look a lot like, and I'm calling this a bull trap. To me, it's clear as day that this is a bull trap. I said it, you know, when we were up here. I didn't expect it to go this high. I was wrong about this pump. 100% I was wrong about this. I thought that we would turn around at, I think I said 27.2, and I said 27.3 at the highest, and I said I would not expect us to break 27.5. Well, we went all the way up to 28.5. We went $1,000 higher than that. You know, on a $27,000 asset, that's not, I mean, like, you know, like let's just see, 27. I said we wouldn't go. I didn't expect us to go higher than 27.3. So we'll go even below that. I don't care. I was 4% off. You know, but to me, I still consider that being wrong. I was wrong. I didn't expect it to go that high. But even with that, I do, looking at it now and looking at it then, I'm very convinced this is a bull trap. This is totally a bull trap. And looking at the monthly, man, I just making this connection right here. This really does look like a bull trap too. And a monthly bull trap is a lot more detrimental than a daily bull trap, because traps normally get eaten up quick. That could mean that June could be a very bearish month. June could be, and when I say very bearish, I mean like if we were to close at the lows of May, which would be about 8% lower from its current prices, we could expect June to be a 25% down month or more. or at least a 20%. And that makes sense too, because I am predicting a 20% drop in the next 2 weeks. We're already about halfway through this week, so I guess a week and a half. I am expecting a 20% drop from top to bottom to happen, relative top, which would be this recent bull trap that we had. So I do kind of expect things to happen fast, but it doesn't have to. It could happen slowly. But let's get back on track. Let's, that's kind of what all this literally just from the 4 hour, just from measuring those not even from overbought to under the 50, just measuring from any time we're above the 50 to when we cross below it, excluding this wig-waggy, like just nonsense looking stuff. It's like not trend based. It's just, and you can tell whenever price is bored, whenever there's no like action going on in the markets, when it's low, you get these Bart Simpson patterns. They call it Bart Simpson because Bart's got like the square head with the like spikes on his head. They call these Bart Simpsons. You can see it's a Bart here, that's a Bart here. This whole thing, like literally, you've got a Bart right there, you've got a Bart right here, and even this whole thing right here is a Bart Simpson itself. It's an inverse Bart Simpson right here. So, and I mean, this is even kind of a Bart as well. Bitcoin's very famous for these Barts. They normally happen on the weekends or at times of low volatility. It's a very significant sign of manipulation, price manipulation. And manipulation, again, guys, it's not people who are evil conspirators trying to set the price to do this. I mean, someone definitely knew what they were doing and they moved the price. They manipulated the price. But all they're doing is buying and selling when the order books are weak. That's basically it. And at that point, sure, any buy or any sell is a manipulative move. It's just these guys know what they're doing. This happened on Wednesday. This happened in the middle of the week, actually. This one happened on a Tuesday. This happened in the middle of the week too. Monday, Tuesday, well, maybe there's some manipulation going on in the middle of the week. I don't know. I do hate using that word. I know there's a lot of people that use that word in the space, but one of the guys I learned from, Eric Crown, he hates that word too, and I follow suit in that. I don't really like that word so much. But what I want to get to is something that I touched on for a second earlier, right? We're talking about all these moves that are, from up here to below the 50, how much of a percentage crash we got from the top to the bottom, and we got 7.5 being the average, right? Basically 7.5, which would put us right around 26.3. When we were at the daily, when we were looking at the daily, I was saying that this would set us up definitely. If we came all the way down here, we would definitely be below this 50. That would set us up for a kind of short-lived area above the 50. We came up short-lived and then down. I want to go back and see what Bitcoin did every single time. We just did it on the 4 hour. Let's do it on the daily with a little bit more of a parameter. Anytime we went above the 50 just for a little bit. So I'm not going to count this where we were solidly above the 50. I want to know what happens when we're just above the 50 for a little bit, and then we go back below it. I want to see what price does, and you're going to see it with me. So let's do this together right now. Let's see. So right here, we were just above the 50 for a little bit. So from top to bottom, we've got that one. That's a 13% move, and we are going to see bigger percentages because we're on the daily. You zoom out, you're going to get bigger percentages. That's just how it is, And we're here, we're barely above the 50 from, yes, we're like, I want to say technically on this candle we're below the 50, so we're not going to count this high. We're going to be technical, so we're not going to count that high. This would be the high above the 50 that we are going to count, and then the low would be here. That's a 7.6% move, so it's it's a pretty big range difference, I would say. We're not going to measure this because this was definitely above the 50 for a long time. I would count this as a rejection. This is kind of short-lived above the 50, but we can measure it, but I don't think we should count this one. 17, 18%. I don't know if we should count that one because that to me just looks more like a double rejection off the 50. And you can see what I mean. Double rejection versus there was some time there's some time above the 50. I don't really like that. So we're not going to count that either. We did go above the 50 for let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, that's too long. That's too long for me. I want to be quick in and out with it. So let's just keep going and see if we can find anything else that kind of matches what we're going. This down over here. This is like the closest to what I'm going for. Okay, so from top and then to low after breaking back below the 50, that was an 11% drop. That sounds more accurate to what we're looking for. You know, this did go very much above the 50, but it was only above the 50 for 4 days, and then on the 5th day it went back below. So we can count that. I think we can count that. And then to the low, that's a 20% drop, man. Yeah, it's a 20% drop. You know, above the 50 for a solid bit here. Okay, here we go. Classic. This actually kind of looks like what we're doing right now, right? Maybe not, but kind of. So let's measure that one. Let's see here. From top to bottom, 16% drop. Keep on doing these. We're going to get some iterations, and then we'll kind of do the same thing we were doing before. This was definitely above the 50 for a little bit. We had a big drop here. And this was at the end of a bear move. Man, that is a huge outlier. I don't know if I want to count that, but it does meet the specifications we're looking for. And we could go this oversold. So, and this was at the end of a down move. You know, and we're at the beginning of a down move, so it's different market conditions. Keep that one in mind. But we'll go ahead and tag it because it does meet the specifications that we're looking for as far as the RSI goes. This one here, you know, 9.6% drop. That's a small drop in comparison to some of the ones we've seen. Let's keep going. Everything's below the 50 here. Okay, we get a little bit above the 50 and then right back down. Let's measure this one here, top to bottom, 11% drop. That's about right. This sounds about right for what's to expect, I'd say. Top to bottom, 18% drop, still in that range. I'd say that kind of makes sense to me. I'm not going to count this over here. Here we go. This right here matches. This is kind of a Bart. You can see it, right? A little square head right there. From top to, I mean, from top to bottom, you know, name your price. It could be all the way down here. I'm going to call it this bottom here because we had a little bit of a sideways move in price, so I am going to measure it to the low point here. That was a 12% move, and to me that makes sense. That's kind of in the area, the range that we're looking at. We're above the 50 here, well above the 50, so I'm not going to include any of this stuff. It doesn't match what we're looking for. Okay, this we bounced off the 50. We maintained prices above the 50 here, or levels on the RSI, so let's do that top to bottom. 18.92%, sounds familiar. I'm not going to count these. These look like rejections off the 50. This one, however, is definitely a little bit above the 50, so we'll go top to bottom. And that might be the last one that I measure. That might just be the last one that I measure, yeah. That was a 30% one. Damn. So there are a couple outliers. There are a couple big outliers. Let's see how many iterations we got. Maybe if we didn't get at least 10, maybe we'll do some more. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12. Sweet. So we got 12. Let's do this whole calculator thing again and see if I can get it right this time. All right. So making it smaller. Oh, make it bigger first. Let's go. All clear. Make it smaller, and we'll just move it kind of out of the way. All right. So 13.44 plus 7.68, and then let's see here. 20. I'm just going to move this over here so I can see it better. And let me just check if I have the plus sign. Okay, so plus, there we go. Wait a second. That doesn't look right. That doesn't look right. Okay, so hold on. Oh, I did the same thing again. I did 13.44. Okay, so hold on. One more time, and then we'll get it right. Okay. Let's see here. Okay. 13.44 plus 7.68 plus, right? I'm going to make sure. Wow, it's not doing it. Okay. 13.44 plus 7.68, right? 7.68. And then we've got over here, we have, make sure we got the plus sign on it. Nope. Plus 11.16 plus 20.5 plus 16.05 plus 44.52. I don't necessarily want to include that one. I might do another count without that one, but just for good measure, we'll have it on there at first at least. All right, here we go. Let's see if I got the plus sign. Oh, I did cosine, huh? Plus 9.62 plus 11.78 plus 18.16 plus 12.31, and I think I've only got two more. Yep, two more, right? Yeah, 18.92 and 30.30. Okay, plus 18.92 plus 30.3 equals this. 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12 iterations actually. Man, I can't count. So divide that by 12, and we have 17.87. Okay, so just like before, this might be the average drop that we could see, and I could see that. That makes sense. That makes sense to me. 17.87, that's what that was, right? 17.87, yes. So let's just draw that from top to low on the current daily thing. 17.87 top to low would put us right here, about there, right there. So that brings us down to 23,300, right in the middle of this previous price range, which coincidentally also I think is where a fib is. Maybe, let me see, top to bottom. No, maybe not that one. Maybe it's this one. No, maybe it's this one. I thought there was a fib. Maybe there's not. If there's not here, I'm just going to move on. Okay, wow. The fib. It's on the fib, man. The fib, the 618, actually, for the average. The absolute average would put us right at the 618, which is pretty normal. It's pretty normal. That's powerful, in my opinion. That's very powerful stuff. And that's with those big ones. I actually would like to do the same calculations without the big ones. So if we go back and we check out, we check out this guy. If we were to measure our measure it without the 30-30, go back, maybe take this 44.52 out. Oh no. 8.9, I think it was 8.92. I'll add 44. How about that? I'll add 44.52. There we go. Oh no, I guess I'd have to subtract it. Damn. Subtract 89.04. 89. That's the quick math, real quick. Okay. Just trust me, I know what I'm doing. So this would be what it would be like if we only had 10 iterations. So divided by 10 would put us at 13.962. So that's a little bit smaller of an average. And the price there, if we were to drop 13.962, basically 14%, that would be more or less 24.5, which is still in this previous price range. And I don't know if that one's a fib, if that one has a fib so much. The true average, mind you, did put us directly at the golden ratio, which I think is to be taken consider. Man, but that puts us right at the 0.5 too. So both of these averages would put us around the fib, significant fib levels. And we could go lower. It doesn't have to stop there. It doesn't have to stop at any of those places. We could go lower than 23.5. And I do ultimately think that we do go lower. But this is just kind of in my opinion, what to expect in like the short term, in the short term of things, if and when we get a cross below this 50, if and when we get a cross below this 50, which I think is going to happen soon. And a cross below this 50, remember from the beginning of the video, on the 4-hour time frame, would send us about 7% down. It's like, I forget what it was, but it was like 7.54 maybe. It was like 7.5%. Let's just say 7.6. That'd put us down around 26.3. That's right, 26,300, which would definitely on the daily time frame put us below this 50. That's why I measured any time that we were in a similar position with this RSI, anytime we went above the 50 for a little bit and then crossed, what happened. And what we got was, you know, if we excluded the outliers, a 13.9% move, basically a 14% move, which would put us down around 24,500, somewhere like literally right there. Or if we included the outliers, the big moves, the average that we got was closer to, I think, 17 point something, 0.6 something, I don't know. It was like 23.5 though. So basically a difference of like $1,000. This bigger one would put us down at the 618, a golden retrace, and we could go lower. We could go lower than both of these. And I'm not saying that when we go to those levels, that's the low. We're going to continue an uptrend. No. I do think that might be the immediate low that's to be expected in the coming days. Right? That like I'm talking about, we are going to be, Bitcoin is going to be below the price of $25,000 in the next 2 to 3 days before the end of this week. That's what I'm thinking. That's what to me it's looking like. It could be tomorrow, man. It could be tomorrow. So this is going to happen soon. This is really going to happen soon, looking at these time frames like that. And then what would that mean for the weekly with that? I'm not saying it's going to be a straight line down. On the 4-hour time frame, you'll have a little pop up. Maybe you'll move sideways even and then continue down. It could just be a big candle down on one candle. I doubt that, though. On the daily, it could just be one big candle down. But I would think more 2 or 3 days worth of time. And if that happens... Ooh, if that happens, if we get a move like that, man, that's without the outliers, right? It was at like 13.96, really close to 14%. It was like that, right? That's what the number was, 13.96. Yeah, so that's really close to there. This on the weekly time frame would not only be a bearish engulfing candle, which we have 5 days to perform still, but that would probably put us below the 50 here. That would probably put us below the 50 here. And I'm not even going to do the measurements of what happens when we go from the weekly being overbought to going below the 50, because I've already done that. I'll tell you what that means. Again, I've said it plenty of times, is that we're going to see a minimum of a 52% drop. 52%. That's 52.5. So, take away $100. Let's make it like 14, whatever, 51.69. It's even more sensual. Let's do that. It's you know what I mean. And this wouldn't happen in days. This would more happen in weeks. So it would take longer to happen. But the average amount of time that I've seen the bottom play out on these, from top to bottom on the weekly scale, when we go from overbought to below the 50, that normally takes anywhere from 6 to 12 weeks with an outlier of 17 weeks. It's more like 6 to 10 weeks from the top to the bottom. Right now we're on our 7th week. So we're already past the average. If we were to go out 12 weeks, that would put us in July, the beginning of July. And if we were to go to 17 weeks, which was the longest that I had seen, that actually put us right at the first week of August. So either the middle or the beginning of July or the beginning of August, somewhere in there, I would expect that we will see new lows and firmly entrench ourselves in this bear market. There'll be no denying it at that point. This is all going to happen very fast, guys. It doesn't seem like, we've been moving sideways for a while now. We've had a very weak pump. We've kind of, truthfully, we've been in this price range, this whole price range for, since June of for almost a year. Bitcoin has been in this general 15 to 30,000 range for almost a year. And it's about to break out of it. It is weird. That's why I'm so jacked. That's why I'm excited, and that's why I really took the time to kind of measure all these things. It's like dominoes, man. It really is like dominoes. If this one falls into place, the way that it looks like it wants to break that 50. If it breaks that 50, the odds are we're going to have at least a 7.5% drop. If we have a 7.5% drop, this daily is going to break the 50. And if that happens, odds are we're going to have at least a 13.8% drop with a maximum average of like, oops, I'm drawing white lines still, somewhere around like 17.5, you know, anywhere between 23.5 to 24.5 thousand. That kind of price action, if we close there on a weekly basis, because this would happen, again, on the 4 hour, this would happen in either 1 to 2 days. If it starts now, it would probably happen within a day or two, literally. So like within 6 to 12 candles, it would probably happen, this 7.5% drop. If that happens and we get a daily close at that price down there, the 7.5% drop, that would make this go below the 50. And anytime that we've gone below the 50 on the daily, after being above it for a short-lived amount of time, we dropped 13.8%. You know, that kind of move is going to happen quickly too. That kind of move is going to happen in like a few days. You know what I mean? In itself. Maybe it happens longer. Maybe it takes longer. I don't think it is, man. I think we're ready to pop, honestly. I forget my reasoning for why I think it's going to not take long. Maybe I measured some stuff. I don't remember. I really don't remember. I don't know. 1, 2, 3, 4, 5 days here. I mean, this one happened once we broke below the 50. That was our bottom. I mean, these drops did happen 1, 2, 3, 4, 5, 6, 7. It'll happen within a week, you know, like a 13% drop in a week. I don't know. But what I'm trying to get at is the dominoes, man. The dominoes. The 4 hour goes below the 50. That means a 7.5% drop. And if that happens, that means the daily's going to be below the 50, which means that that implies every time we've seen that, we've seen a drop on average at the, you know, on average around 13.8% without the outliers. With the outliers, it's like 17.5%. Putting us anywhere from $23.5 to $24.5 thousand. And if we got down there on the daily, then the weekly would be in a position to be under the 50 as well on the RSI. We'd have 3 different RSIs crossing, like dominoes falling, right? You know, by the time the weekly crosses the 50, the daily and the 4 hourly are probably below the 50 for a while already. But that's beside the point. The main point is this: I don't know, the golden goose, man. The thing to be excited about if you're bearish, because every time in Bitcoin's history, I went through and did it, man. I measured it. I literally measured it. I think there's a video. If you go through my videos, you can look up the one that talks about the relationship to the RSI, maybe, is the one that I'm talking about. Within the last week, I made it. I'll try and post a link. I always say that, but I forget, man. I really do. Because I get caught up trying to make the thumbnails and everything. But the main point is every single time, out of every time in history that Bitcoin has gone overbought on the weekly RSI to below the 50, every single time the minimum drop was 52%. And most of them were bigger than that. Most of them were bigger than 60%, actually. Around 70% even. Like, the biggest one was like 80-something%. And I don't know if that's going to happen. I'm not saying that. It could happen. But again, this isn't even identifying the bottom. This is just identifying, you know, like a relative bottom, a relative low, like where, you know, it bounces, kind of like this was a relative bounce and then it came up, you know, or like this was a relative bounce and it came up. Like we might see something like this after it and then continue to dump down. We might see something like this after, like how much of a percent drop was this? Let's see. From top to bottom, that's 52% right there. You know, this was the bottoming point, and then it proceeded to dump more afterwards. We could see that. We could see a 52% dump in the coming month and a half to 2 months. We could see that, and then have a little consolidation area, something like this, and then continue over the weeks or months afterwards to even go lower than that. And that is my expectation, because I am expecting that we're in the C wave of this zigzag pattern. And that would imply that we have a one-leg impulse down, 2, 3, 4, and then 5. You know, something like that. It might not look exactly like that. I just drew it. But we are going to have 5 legs down. 2 legs will be up. 3 legs will be down. We're in the middle of our last impulsive wave. We're in the middle of the last wave of the bear market. By this measure, by this count, we are 2/3 of the way there. We're 2/3 of the way there. Not by time, just by this pattern. If it was to be by time, you know, I mean, technically, you would measure it, I guess, by this, right? We'd go from top to bottom, and then just put that. If this next wave was to be exactly as long as wave A, which it doesn't have to be exactly as long in time, it can be exactly as long like in length too, like if the price is big enough. But that would put us in April of next year, and I have a hard time believing that we're going to bottom in April of next year. I would think it'd be before that, at least 2 months before that. But we could. There's nothing that says that we can't. There's nothing that says that we have to bottom before the halving. We have done that every single time before, but we are in a different economic stance in the world, in crypto and everything, than we've ever been since Bitcoin's existed. We're seeing a different bear market play out. If this goes lower, which I do believe it will go lower, we're seeing a different bear market play out than any other bear market so far. This could be the longest bear market that's ever existed. We've never had a bull market that double top before, We've never had this week of a pump after the low. So, I don't know. I digress. The main point that I'm trying to get at is these dominoes are starting to fall. And off of the averages, off of everything that we just measured, if this is to be a significant move off of rejecting this 50 or crossing the 50 to the downside, the next thing really to look for would then be the daily to cross below the 50, and then the weekly. And when the weekly crosses below the 50, statistically speaking, from the Bitcoin charts itself, we have a 100% chance to drop pretty significantly. The lowest drop we had in this kind of circumstance, the lowest drop we had was 52%. Lowest drop. And if we did half of that, if we did even half of that, right, 26%, I mean, that's still pretty sizable. That would put us below, that'd put us, or 27%, whatever, that'd put us below $23,000. That's still pretty sizable. Pair that with everything else that's bearish going on right now. The weekly MA ribbon is crossed to the downside. The daily is crossed to the downside. We are in the midst, in my opinion, of a bull trap on the daily time frame itself right now. It just looks bearish, man. It really does. Things are going to start happening fast, and I will keep you updated. If you want to stay updated, leave a like, subscribe to the videos, and you can just see everything unfold that I'm talking about. Hopefully I'm not just rambling about something that won't happen, but that's the game you play, man. This is a guessing game. It's an educated guessing game. It's a statistically backed, historically referenced guessing game. And if you're good enough at paying attention to the details, you might get the cookie. And that's all I'm trying to do, man. I'm just trying to give myself the cookie. I want that cookie, and I think we're gonna get it. I really think we're gonna get it. It's just going to take time. It's going to take time. And I think this might be an exciting week. I think June is going to be an exciting month. Not for the Bulls, but for the Bears. That's me. That's all I got to say. So with that, everybody, much love. Thank you. Please leave a like and subscribe. If you want to follow me on Twitter, follow @ChrisHarris85. I'll show you what it looks like. I'm BTC or BT Chris, Twitter. This is me. Right here, that's me right there, this guy. I've got 57 followers. Man, that's awesome, actually. Wow. I had 49 followers last week. I got 57 now. I think I had 49. My Twitter's gaining more ground than my YouTube is. By the way, I saw I got 3 new followers in the last week and a half. Thank you guys for subscribing. Really appreciate it. Thank you to all my subscribers. This is just the beginning of a small channel. Maybe it goes somewhere, maybe it doesn't. But I will never stop posting good information, hopefully good information. I'll never stop trying to produce stuff as to what I see to keep you guys informed. I'm very passionate about this, and I really enjoy making these videos. So, whether I have 50 followers or 50,000 followers or more than that, like I'm not going to stop making these videos, man. I'm obsessed with this stuff. So I'm going to keep going at it, keep looking at it. Even whenever I didn't make my videos for a long stint there, I was still updating things on Twitter. I still try to keep people in the know. And that's where if you follow me on Twitter, sometimes I get stuff out before I make videos. And sometimes I even kind of consolidate things. Like this whole, or like my whole video about the bull trap that I made earlier today. You could just look at this Twitter and be like, this, folks, is what we commonly call a bull trap or a breakout. And I commented, it's a bull trap. And yes, I liked my own Twitter. Look, no one else is going to like it. I got 19 views. No one else is liking it. I'm going to like this one too while we're at it. because I like what I post. And I do think the world can and will be better. I really do. I really do. A little notion on this real quick. If you want to get philosophical, hippy dippy, while we're just talking here at the end of the video, I think the world can and will be better because I'm an optimist. Because I believe that if the world doesn't get better, that we will end. We are getting more advanced every single day, technologically and mentally and through AI and all kinds of things. We are getting more advanced. No denying it. And if we continue to be a warfaring species, if we continue to be self-destructive, we're only going to be self-destructive with more advanced weapons, with more advanced capabilities, and a species like that can't continue. And I just don't think that we're going to blow ourselves up. I really don't think. I have faith. I have more faith in man and more faith in our intelligence and our compassion for each other. So I do think the world will be better. That's the only way, man. That's the only way we can continue, is that the world will be better. Because we can't continue if the world gets worse. That's a quick way to end. That's for sure. And that's kind of what inspired this, And I am an optimist. I do believe and give the benefit of the doubt to mankind. I know that that's not common, but I have not met a single person in this world who's bad. I've not met a bad person once in my life, and I am a very social creature. I've met a lot of people, and I have never met a bad person. So I believe there are bad people. I do not believe they're common. I believe they're rare, very rare. So rare that, in fact, I've never met one personally. I've met people who have had hardships, who have had things happen to them, who have made mistakes that they're not proud of, that they can never get over, they can never forgive themselves for, that other people can't forgive them for. But that doesn't mean that they're bad people. That doesn't mean that they're gone either. I don't know. I'm getting all worked up over here. If you want to follow me on Twitter, I don't talk about that stuff, I promise. It's just crypto. At Chris Harris 85. If you want to follow me on TikTok, it's at Chris Harris 45. Not 85, 45. It's got a picture of me with my tongue out, next to one of my bros who's also doing that. It was a party pic, whatever. But you'll know that it's me because I only talk about crypto really on there. That's it. The last 5 or 6 minutes has just been me advertising my other socials, and most of this was hopefully an informative video with the perspective of dominoes falling, starting with this 4-hour right here, which 30 minutes from now, I'm not going to keep making this video for 30 minutes, but 30 minutes from now, when someone might watch this video, you can look for yourself, type in RSI, switch it to the 10. That's what I use. I use the 10. I find it to be more accurate. You can notice divergences a lot quicker. I use the 10. It's set, I think, to the 14 or the 12 automatically. I set it to the 10. If you want to set it yourself, okay, let's do this. Let's remove drawings and indicators. If you're starting with a fresh chart and you want the RSI, you'll go to Indicators, Technicals, scroll down to R because it's alphabetical. Relative Strength Index, it won't be starred. I starred mine. You can star yours if you want. You click it, it'll look like this. There's a whole bunch of nonsense on there that I don't use. You can use it if you find it useful, but I take the MA off. I take the Bollinger Bands off. I leave the upper, middle, and lower band on. I take the Bollinger Bands off. I take the overbought and the oversold. Even though I kind of like these, actually. I'm not going to lie. It kind of adds a little style to it. And then I put the input in. I make it, instead of 14, I make it a 10. And I like the color. The purple meshes with the purple, so I like to make it a color that stands out more. And that's it. So if you want to keep an eye on the same RSI that I'm looking at, this is it. This is the one right now. On a 4-hour time frame, we're waiting for it to break the 50. On a daily time frame, we're waiting for it to break the 50. And if and when both of those things happen, it is all over but the crying when the weekly breaks the 50. Because that right there, to me, it's condemning. It's vindicated, it's validated, along with all other kinds of things that I've posted over the past week and a half that show that this is not the low, that we still are in a bear market. And I think once we don't even have to break this low. We don't even have to get halfway through this candle. Once this is below the 50, it's over. Once it's below the 50, to me, we're already below here. That's quite literally how I'm thinking of it, how I'm treating it. And that's why I'm so excited. That's why almost every video I bring this up at least at some point, because it's something to watch. It's something to watch. When you have something that has happened 100% of the time, all good things come to an end. There will be an example. There's always exceptions. There's going to be a time when it doesn't drop substantially and it does go from overbought to under the 50. But again, I'm not talking about slightly below the 50. I'm not talking about moments where it's like this, right? Where it dipped a little bit below the 50. No. And maybe even on this one, it has a wick down here. Maybe even during this week, it went further below the 50, and it looked really convincing, right? It looked like it was down here. But guess what? It came back up and closed. I want to see a weekly close. I want to see this thing break the 50, not just tip it. I want it to break the 50. And then I'll get excited. I'll probably be excited even if the week is still open. It could be the first day of the week. We could have 6 days left, and we could be really below the 50. I'll still be excited, but just know that it doesn't count until it's closed, until the week is closed, and until we've known that we are definitely breaking the 50, not bouncing off it. I want to see a genuine break of the 50 before Bitcoin is condemned to the 15,500 lower low. Really, it'd be like 14.8. Anyways, that's all I got. If you like the video, like, subscribe. You'll see more. Thank you all for coming. Have a great day. Have a good night. Happy Memorial Day. I'm a day late, but happy Memorial Day, everybody. Adios.